Hey everyone, and welcome. Have you ever thought about making just one single investment today that could pay you a guaranteed income for the rest of your life? Well, that is the powerful promise behind LIC's new Jeevan Utsav plan. And today, we are going to break down exactly how it works. Invest once. Enjoy forever. I mean, that's the dream, right? It's a really bold statement. So our job today is to dig in and see how it works, who it's for, and what that promise really means for your money.
All right, so let's get official for a second. We're talking about plan number 883. It's a pretty recent launch, which means we're covering a fresh opportunity for anyone out there planning for their financial future.
So what kind of plan is this, really? First up, it's non-linked. In simple terms, that means your investment is totally separate from the stock market's ups and downs. No roller coaster rides here. It's also non-participating, which is just a fancy way of saying your returns are guaranteed. What they promise is what you get. And finally, it gives you whole life coverage all the way up to age 100. So the bottom line, this plan is absolutely built for stability.
Okay, that all sounds great, but who can actually take advantage of this? Let's get into the nitty-gritty, the practical details, and see if this might be a good fit for you.
Well, the good news is the eligibility is super broad. The entry age starts from just 90 days old and goes all the way up to 65 years. The minimum investment, which they call the basic sum assured, is 5 lakh rupees. But here's what's really interesting. There's no maximum limit. That makes this a real option for a huge range of investors.
At the very heart of this plan is the idea of a single premium. See, this isn't a policy you pay into every month or every year. It's a one-and-done deal. You make a single lump sum payment at the very beginning, and that one investment funds the entire plan for life. It's kind of like planting a tree, you know? You put the seed in the ground once and let it grow.
The other key term you absolutely have to know is the basic sum assured, or BSA for short. Just think of this as the foundation for your entire policy. It's the guaranteed amount that all your future income and benefits are going to be calculated from. It's the number that defines everything else. Now, after you make that single investment, you don't start getting checks the next day. There's a really crucial waiting and growth phase. But don't think of it as a delay. It's more like an incubation period where your initial investment starts to build guaranteed value behind the scenes. So here's how that timeline works. At year 0, you make your big investment. Then you get to choose a deferment period. You can pick anywhere from 7 to 17 years for the policy to just sit and grow. And once that period ends, that's it. Your lifelong, guaranteed income stream officially begins.
So what's actually happening during that waiting period? This is where the guaranteed additions come into play. For every single year of your deferment period, LIC adds a guaranteed 40 rupees for every 1,000 rupees of your basic sum assured. This is a fixed, promised rate of growth that builds up your policy's value before the income even starts.
Okay, so the growth phase is over and it's time for the payouts to begin. This brings us to a really key decision you'll make with this plan, choosing between 2 very different options for receiving your lifelong income. And here they are, side by side. Option 1 is regular income, which is designed for that predictable, steady cash flow. Option 2 is Flexi income, and that's built for folks who might not need the money right away and want to let it grow even more, with the option to access it later. Let's start with option 1, the regular income path. It is incredibly straightforward. You receive a fixed payment equal to 10% of your basic sum assured every single year for life. It's designed to be a simple, predictable, and totally guaranteed income stream. Now for option 2, Flexi income. And this is where it's all about growth. Here, you choose not to take that annual 10% payout. Instead, LIC holds on to it for you, and that money starts accumulating at a 5.5% compounding interest rate each year. This is really for those who value future growth over immediate income. But the Flexi part means you're not locking the money away forever. At any point, you can just make a written request and withdraw up to 75% of your accumulated balance. So you defer, it grows with interest, and you can access most of it when you need it. That's a really powerful combination of growth and liquidity. Okay, so beyond all the income benefits, this is also a whole life insurance plan. That means a critical component is the financial safety net it provides for your family. So let's look at how the death benefit is structured. If the policyholder passes away, their nominee receives a payout, and it's calculated as the higher of 2 amounts, either the basic sum assured or 125% of the premium you paid plus all of the accrued guaranteed additions. This structure is there to ensure your family receives a really substantial benefit.
So let's just think about that for a second. What if one investment could pay you for life?
Well, that's the big promise of the Jeevan Utsav plan. It's all about lifetime guaranteed income. So who's it for? Pretty much anyone. The big thing? You only have to pay once.
Okay, enough with the theory. Let's look at a real-world example to see how it actually works.
All right, so in this case, someone puts in a single payment of just over 5 lakh rupees.
Now, for the first 7 years, your money just grows. Think of it like guaranteed annual bonuses. And during that waiting period, a solid 1.4 lakhs gets added to the pot. Not bad.
Then, boom, the lifelong income kicks in. In our example, it starts right at age 42.
And what do they get? 50,000 rupees every single year for life.
You know, if this person lives to be 100, that's a whopping 26 lakhs in just income.
So let's put that in perspective. You pay in 5 lakhs and you get back over 32 lakhs.
But here's where it gets really interesting. You actually get to choose how you receive that money.
Option 1 is simple, a steady, regular income. Option 2 lets you wait and earn even more. Plus, with that Flexi option, you can still get to your money, up to 75% actually.
Okay, so it's not just about income for you, it's also a safety net for your family. Basically, your family gets whichever amount is higher. It's designed to make sure they're taken care of. So what's the bottom line? It's a one-time payment plan for guaranteed lifelong returns. Which kind of leaves you with one big question. Is that guaranteed future worth the long-term commitment? So, we've covered how you invest, how it grows, your income choices, and the protection it offers. The final step is really to consider how a product like this, one that's built on guarantees and stability, might fit into your own long-term financial strategy.
So, what's the key takeaway here? We're talking about a single investment for lifelong income. It's shielded from market risk, and it offers a clear choice between steady payouts now or flexible compounding growth for later. In a world of so much financial uncertainty, the ultimate question this plan poses is this: does the promise of a predictable, guaranteed income for your entire life align with what you're trying to achieve?